Any begin on the call. All right. Let me share my screen. Okay. Let's see. Yeah, good morning. It's morning. All right. Good morning. So, like I said, yeah, this call is for the beginners. So I'm going to go through some basics. I know some beginners. I'm not sure I've seen. Okay. So, but indicates. I want to be sure before I go ahead. So I don't go through. I want to be sure the beginners I need or those are this session is for. I even here. So if you're like new to trading, new to the community, just can indicate. So I know my targets people are here. No one. New. All right. Amazing. So if you just for one person, I'll go ahead. All right. First things first is to understand, um, get familiar with pocket option. Right. That's number one. Getting familiar with pocket option. Right. So I'll start with the OTCs. Right. So let us look for a pair. One is OTC pairs are not the same with normal pairs, right? So let's check out AUD card, right? This AUD card, this is the 15 minutes time frame for AUD card. Let us compare what we are seeing here, right? With the normal AUD card, 15 minutes time frame. Are they similar in any way? Let's look at it. Are they similar in any way? This is a strong downtrend going here. We have like a little, more like a double top, but not really. This is so different, right? So when you, let's say you're analyzing a trade and you think the OTC is the same, this is a normal AED card. I see it. Can you now see? It now tallies with what we have on trading view. From this, right? So rule number one is the OTC pairs are not the same, right? With the normal pairs. A pending order might be called out, and while setting it, you do that for OTC. Others might clear the trade, but you wouldn't. You start asking, is pocket option against me, or is my place with owner? What did I do wrong? This is it. There's a way to trade OTC pairs. I'll get to teach that over time, but for now, avoid. I have to make it clear. Avoid OTC pairs for now. The reason why I say you should avoid it is OTC pairs are over the counter pairs, right? And you won't see anything about them on any other platform, basically, or any of the chats, any chatting system like TradingView and the likes. Whatever you use to trade is only provided by the broker you're trading from, right? So you can't tell if news affects them. You can't tell anything that affects them. So to actually trade OTC pairs, you have to do a proper analysis of the chart you're seeing, right? So that's why I said over time, we want to treat OTC pairs. By then, you've already understood your left and right. In fact, you've already gotten a handle on how to analyze a naked chart, right? You look at a chart, whatever chart it is, analyze, be it crypto, be it stocks, be it whatever, right? Charts are the same thing everywhere. So for now, leave OTC pairs, right? There are indicators you can use, right? Then another thing is, see this AI trading here. It's always dangling itself in front of you. Just don't leave it for now, right? I've done a proper, let's say, journaling or analysis on how accurate this AI trading is. It does try, but it's not as good as the signals you're getting from the group. All right? Just avoid it. It might seem some days, yeah, you might be so frustrated that you want to try it out. Just let it be. Let it be. Okay. Of course, you already know how to take your pending orders. I believe that. Then there are some days you're not going to get pending orders. It's going to be a direct market execution, right? It's either you put in your time, it is 15 minutes, whatever the time is, you put it in here, 30 minutes, your amount, you put it in, take your buy or your sell, right? Before now, or some terminologies you should be familiar with. Whenever you hear call, call, is buy, put, put, is sell, right? So maybe on a call, you can hear, okay, let's go in AUD card, euro dollar, 15 minutes call, the same thing as 15 minutes buy, right? You just come in here, put your time, the expiration time, your amount going for a buy. Then there's another thing here. Maybe I see my screen. You have fixed time off and fixed time on, right? We no longer use this fixed time off, right? Because then this fixed time off is basically the current candle that is running, right? So if it's, let's say, 3 minutes left, you go in for the trade. The trade will exactly end when this candle is over, right? So don't do that. We just stick to fixed time on. So these are some things you need to know, right? Then another one is your percentage, right? You click the dollar. Let's say if you don't want to, you want to trade by percent. So let's say you want to risk like 5%, change the dollar sign to percentage, and you're good. All right. That is basically it for the pocket option interface, right? Because some persons know how to take pending orders, but when it comes to direct market execution, they are lost. I don't know what to do. How should I take a buy? Should I take a sell? This, that, can be confusing. I've had folks that had, strange experiences with that. Okay. Then since you're done with pocket option, let's go back to the charts. There's another interesting thing is, as you go on, right? Of course, I've gotten this question. I think I got this question from someone last week. It goes, I always hear 1:4 RR. What does it mean? How do I know I'm risking 1%? How do I, what's it called? How do I draw the long projection or short projection? How do I do that? How do I adjust my bo? So this is it, right? Let's say, there's a video already. I'm gonna share. Maybe if you've not seen that, I'll share the video once again to the group after this call on how to actually get the best lot size for any particular trade you want to go in, right? But for the aspect of knowing what you're targeting and your risk involved, I just hope that the guy that asked me this question is on this call. I just hope. Okay, let's say you're looking for a long idea here. Okay, for the intermediate guys, or I believe all of us were on the call yesterday. So this is actually a very good, this is a nice fair value gap. This is also a nice fair value gap. So perhaps this market will come into this area to keep buying. So let's say I'm expecting to take a buy right here. Okay, I'm coming. I chose this point because let's say I did my analysis and I'm like, okay, you know what? 50% of this candle, this particular candle, I want the market to get to 50% of this candle, then I go in for my buy, right? So I've done that, and I want based on, okay, just to be on the safer side, I want my SL to be a little bit lower than this area, Another thing I need to say is always have in your analysis here, it's always very good to have, well, you're learning now, but over time, when you start analyzing on your own, it's very good to have the best area, right? When I mean the best area, I mean you don't want to be risking so much. You don't want your SL to be so freaking large, right? So you have to get very close to the best area of interest, right? This is great. Perhaps it might not really be the best. This can be so better because you can tell that this is like a very good support zone, right? But then let's say we're choosing here and we want our SL to be below this particular candle, right? And we want to risk, we want to target 4RR, right? That is, okay, all right. When you say 4RR, this is, yeah, I hope this, okay, can't say, are you saying this risk to reward ratio 4, right? It means whatever you're risking, you're aiming to make 4x or whatever you're risking, right? Now, let's say I trade stock indices mostly. So I've studied and understood how they work, right? So let's say you want to risk in quotes, let's say you have a 1K account, you want to risk 1%. 1% is like $10, right? And to risk $10, normally if your SL is around here, right? The lot size you go in with that will equate $10 will be higher than the lot size you go in with when you have your SL down here, right? This is like 13 pips. So you're risking 13 pips to make 52 pips or to cash 52 pips, all right? So that's why I said is if you watch some of Coach Michael's analysis, the pips are so little, 5 pips, 4 pips. Those are like precise entries, right? So that will actually save you a whole lot. And it also make you not to target so much. You don't need to target so much to make your 5% or to hit your 4RR or 3RR. Are you getting the idea now? Imagine, let's say we decided to take this buy from here. Perhaps the market decides to get down to this particular area. Okay, let's say let's use this area for instance. All we need to do is set our SL below this last low. So from 13 pips, you're already risking 5.9. This is like 6 pips. So this will help you, this will make you increase your lot 1, right? Then since you want to target what's it called? 4 pips, you don't need to get all the way here, right? You can just adjust it till somewhere around here, right? So you can tell that anyhow it is, you know the market is going to hit this point, right? Okay, let me show you a particular trade I took yesterday. I didn't close it. So another thing is there are difference, what you want to target differs, right? Let me show you this particular trade. This is the German DAX, right? I was targeting somewhere around here. Let me to 1 hour time frame. I think my target was somewhere around here, 758, thereabout 758. That's this area, right? But then, I want to hit. I like hitting my targets. I don't like waiting, right? So what did the market do? The market came to this point. What are we seeing here? This is like a clear double top, right? This is a clear double top. This is like almost half. In fact, this is more than half my target. My target is here. I decided to adjust it to this point. My target is here. Market got like 60% to my target. I didn't close. All right. Though my entry was actually very good. Right. But for someone, let's say I had a much smaller SL per se, or I'm kind of content with whatever I have, I would have closed there. This actually gave me very good money yesterday, but I didn't close it. The market came back to almost my entry before starting to move again this morning. Right. Same with okay, this wasn't really the case for yesterday, you know. This particular one, you can say this actually happened this morning. So I didn't see this. This was yesterday. I would have actually closed here. Looking at it, this is actually a very good area to close. It hits a former resistance, right? It's actually a very good area to close, but I didn't. Now see where the market is. I'm still looking at it. Let's say have high hopes. It's still gonna get here. So wait, this is a swing trade. They allow it to run, right? So that is it about it when it comes to um, having the best, not just the entry, or knowing what you're targeting, what you're risking, right? And how to mark up your SL or your to project what you're expecting from a particular trade. So let's use wait, are we following? I know I've just been talking. Are we following? I know I have some intermediate guys here, right? But the new guys, are you following? Is it making sense? All right. Because I just don't want to keep talking and right. Amazing. Amazing. So that is it, right? That is it. Then another thing is what other question have I gotten? I'm trying to think. No, another thing I need to say is when over time, as you get very good in this, you get to focus on certain pairs you want to trade. You don't want to trade everything, right? You don't want to trade everything. Over time, get to focus on them and understand how they move, right? Understand the best time to trade them. I noticed something good. Good most times during the opening of Asian session. Asian session starts roughly either 12, 1 a.m. our time, right? Beginning of Asian session, good. Tend to make crazy moves. Not just gold, some other pairs as well. Like this NSD USD, right? Actually made this crazy move around 2 a.m. today, just towards the opening of Asian session. And it's been tanking down since then, right? So I've noticed some crazy moves for gold. If we check this move here, 2 a.m., are you seeing it? 2 a.m. for gold. Ah, hmm. That was my analysis. I was actually waiting for gold to drop here if I take my buy and just kiss this zone, right? So let me digress a little bit. Like what I showed us yesterday about fair value gaps. What did this market do? It just came to this fair value gap, respected it, and it's flying, right? So I know this guy has been trending high. Right? I was like, okay, this will be a very good point for a buy. Perhaps maybe after this session, I'll do some proper analysis to now go in. And you can see it got in here, disappeared. Now, your best, let's say, is there to enter at this fair value gap here. You're already in very good profit, right? So let's say I decided to go in here, my best SL, and I like entering either at for every fair value gaps, there are three possible areas you can go in. The lower part, the midpoint, or the starting of the zone, right? You can go in with the start, you can go in with the mid. If it's too wide, you can go in with the midpoint. So let's say I decide to go in with the midpoint here. This is on a 1 hour time frame. Of course, this is quite risky because the market might have actually come down to this area. But however, let's just say The market decided to go the way we want. I would have my SL below this candle. Let me put this side. I'll have my SL below this particular candle, right? And of course, a little bit below this top. So generally, what this market did was clear zone down, yeah, break and retest. It broke this particular high, came back to retest it, but not necessarily. But you can see it's a clear, a zone was broken and came back to retest. And for this particular point here, this is a clear double bottom, right? If I'm to place the horizontal line here, this is like a clear double bottom, signaling that this is actually a very good buy, right? And also, just like the what's it called, candle pattern or um candles we talked about yesterday. This is a clear dodge. This is mad freaking rejection, right? There's also a possibility, I know good, that this market will still come back here to respect this fair value gap. That's also a possibility. But let's just say, imagine, let's say we decided to target just 4 pips or four, what's it called? 1:4, right? We are risking 8. When it comes to gold is crazy though. This move here can be so we are risking the risk full job. However, let's say we are targeting this. Looking at this chart here, this market would certainly hit this point. If not, it will get to this other fair value gap I'm seeing here. I want to draw it. I don't want to talk about fair value gaps too much on this call. But back to what I'm saying. So let me just have these areas highlighted for reference later. Let's just have it like that. So back to what I was saying, yeah? You can see this move, this crazy move, actually happened by 2 a.m. today. So I've seen that some mad moves here do happen in these Asian sessions, right? And another thing you need to know that there's always a high volatility at the beginning of any session. Okay, there's always a high volatility at the beginning of a session, and sometimes you wouldn't want to, if you've not done your analysis prior, you wouldn't want to jump in or get caught up in those volatility moves. Let's say for London session starts by 8 a.m. So let me show you some European pairs or European, let's say FTSE, um, um, a UK indices, right? Same with DAX, that is European as well. So FTSE, let's check FTSE. Let's check 8 a.m. 8 a.m. yesterday. Let's just check any 8 a.m. and see if there's any crazy volatility move. Right, 8 a.m. You can see, boom, boom, before the market took a little chill pill. Check 8 a.m. So this is just what you need to, on any pair, if it's euro USD, check 8 a.m. There's always a crazy move. Understand? If I look at DAX now, 8 a.m. This is 8 a.m. Okay, 7. This is 8. Crazy long candle. It was on Friday. This is with it's this 8 a.m. Another crazy long candle. This is another one. That should be under 8 a.m. here. This is 8 a.m. Mad volatility. Crazy, right? For yesterday, this is 8 a.m. Crazy, right? So if you understand these sessions, when they open, how to leverage on the volatility move, you can always make good money from it, right? Now, let's just check for New York. New York is always, for now, is 2:30. Perhaps by, it will change to 3:30. I don't know the exact month, but for the first part of this year, it was actually 3:30. But for now, it's 2:30, right? So let's check the Dow Jones. With Dow Jones, I'll check other US pairs as well. Dow Jones is a US, of course, with the name said US 30, you can tell. Let's check out for 230s. Okay, let me go down to 15 minutes so that to make sense. 230, crazy move followed by another crazy one. All right. 230. Anytime around market opening is always something else. Let's take 230, if you observe it, there's always 230 followed by a crazy move. 230 followed by, so it's always like that. If you check this one, 230. Okay, you should be with 230. 230 is it's just always there. And this second crazy move is Asian session, Asian opening towards the 1-2 area. Understand? So this is just to show you that market openings actually do have some effect in the market, right? They actually do have some effect. So over time, you get to choose the sessions you want to trade more, and how to leverage on them, right? Sessions you want to trade more and how to leverage on them. This is for yesterday. Yeah, European session opening, right? So that's is it. Knowing these sessions, how to leverage on them, right? You wouldn't want to. One thing about high volatility market is after that surge, the market tends to correct. So in order not to get caught up in the crazy move, just best to just chill, right? After the whole crazy movement, then you dive in. Over time, I have so many things to share. Let's ways to actually follow. Let's say you missed a news, right? Let's say you missed a news, how to take advantage of it. But let me see if I'll see something before the session ends. Let me see if I can get something. I think that was a news Tuesday, if I'm correct. Was that, is it Tuesday? Monday? I'm trying to think. One of these days, there was a high impact news. Was it on Monday? Tuesday? No, I'm not. I need to be very sure. But let me see. Structure. Hmm. Okay. September 3rd. Okay, yeah. That was I seeing right. But whatever it is, today the CPI today, but I'm not sure it has any impact. Well, I think I'll do that on a session, basically. Right? So, family, that is it about today. First off, what did you learn? Of course, tips and tricks of pocket option, how to go about having your risk, your SL, your TP, knowing God help me, your risk to reward ratio, right? Knowing the perfect way to have your entry, and of course sessions, how to leverage on market openings, right? So that is it about it for today. So a quick questions. So quick questions. Just drop your questions and have like 7 minutes left on this call. Just your question. I know I've been talking since. I'd like to hear from you before. Just quick question I can brush on before we end the session for this morning. Whatever, just drop it. from everything I've said, drop it, drop it, drop it. Let's check on this call. No, okay. One thing about analysis is that um, there is no, there is no, what am I going to say? You just like using break and rate tests, right? As a strategy on its own, or when you trade with what's it called? When you trade with indicators, indicators is everything. Whatever the indicator tells you, you do, right? Is reliable when you pair it with other factors that align what you're looking for, right? Is reliable when you pair it with other factors of what you're looking for. So that's what I have to say. Is reliable when you pair it with other things. All right. You need to have other things you're looking at. Okay, if this does this, check. You have to have a checklist. Okay, is the market close to my support? Check. Is it close to whatever? Check. Have all this. So you do you please. All right. So you don't just say, I'm just looking for it. If I see any fair value gap anywhere, I go in. Oh, that's my no, don't do that. Right? But it is reliable when you pay with other things. All right. Some of the trades I've taken, right? I don't just jump into fair value gaps. There is let me this is 15 minutes time frame. It's just like looking at this, right? This is a full trend. This is what's it called? This is I know there's so many lines on this chart now. Let me just take them out so that it doesn't confuse you. Right? There are so many. This is Fibonacci ratio, yeah. This is the 0 to 100, right? I have this rule that if I'm looking for a buy, right, I would love the Fibonacci ratio to break my 50 zone. I'll be more comfortable to get an entry below this 50 zone because this is like getting it at a discount price, right? So if I am targeting, I wouldn't say, oh, because of this, any place I see, if you just hit my 50 zone, I know I'm ready for a buy. Sometimes the market can even all the way down here before making that move, right? So this is just I just wanted to paint a picture. So what's it called? Fair value gaps, they are not strategies on their own, right? But they give you an idea of where the market can get to balance out. One rule is that all imbalances would be filled. If not now, sometime in the future, imbalances will be filled. Check any charts, basically, unless it's crazy, right? If one doesn't get filled, if you go down to a lower time frame, you're going to see that some will actually filled before the market disappears. All right. So the next question, how FGG impacts your chart? It actually gives, like I said here, it gives you where to look at, right? Let's let's use something. We are looking at some. Let's use something here, for instance. This is the 15 minutes time frame, right? Imagine you were able to catch this. This is a high, and this second high was not higher than this. So this is already a clear indication for a sell, right? And you're like, this played out, this doji candle, then this bearish candle, right? This is like, ooh, this is nice. Now, my best entry right now is I wouldn't want to just dive in here. I want the market to correct to tell me that, yes, this downward trend has been confirmed, right? In that correction, I wouldn't want this high to be taken out because if it's taken out, that means my sell idea is nullified, right? And I'm able to spot this. I'm like, okay, this is an imbalance that I would love to be filled. I would love the market to fill. If the market feels this, then I know. If the market feels this and rejects, then I'm good to go, right? What did the market do? Market came to this fair value gap here, made an equal high with this candle. That is a clear double top, signaling that, okay, this guy is actually going down, right? And this will actually make more sense if I go down to the 5 minutes time frame, possibly a 1 minute time frame, right? So this high here was not taken out. This was rejected. It made that, let's say I entered here, had my SL here, targeting, let's do it up. Let's say I enter here at the tip, at my SL, just a little bit above here. I'm targeting 3. Let's say I want to target even 4. Let's say, what's it called? 1:4. TP, if you hit your TP, even without the market clean around in your SL zone, right? So that's why you don't just jump into any fair value gap. It must be close, right, to a nice area. Okay. Then if you want to do a re-entry, what else are we seeing here? Imagine you miss that entry. What else are we seeing here? On that fair value gap, what did the market do? Repeated the same thing here. Came back, did almost a double top with this. Let me expand this. Fair value gaps are not, you just have to pair it with, that's what we call adding to your winners. Let's say you wanted to add to your winning trade already. You wait for this pullback. He gave you, okay, this is a clear fair value gap. What happened? The market came in here. You enter again, have your SL just above this candle. You don't need to do much. Above this candle. What the market do? Came here, did a little double top, started selling again. All right. If you want to enter again, you wait for another fair value gap. Just have them, watch them. Here's another one. Just have them, watch them, right? Just do this observation on your own and see the results. Just study the charts. For other question, you set a buy limit and wait. Exactly. You set a buy limit and wait for it. This is like, it's just like pocket option spending order, right? So do a personal analysis. Just go through the market, spot fair value gaps, see how they react, see times they failed, and mark the results. That's how we learn. Family, it's nice having you once again.